Good afternoon, everyone. Anthony Locke with Torrey Hills Capital, and welcome to the Cerrado Gold webcast for April 13th, 2023. Hope everyone's doing well, and thanks for taking the time to join our virtual lunch. Very excited to bring you Cerrado Gold. They are a Toronto-based precious metals mining and exploration company with two main assets in South America. The company's Minera Don Nicolas project, located in Argentina, is a newly producing gold and silver mine with significant optimization, expansion, and exploration potential. The company also owns Monte de Carmo gold project in Brazil and is expanding on the high-grade mineral resource base through the extensive exploration, with a PFS expected in Q2 of this year. Company trades on the OTC market under the ticker CRDOF and on the TSX Venture under the ticker CERT. Currently trading with a market cap of only about 50 million US. We feel that there's, the company's project in Brazil, which is online to start production by late 2024, early 25, will be the key catalyst for the company to truly unlock its value, and that there's plenty of upside potential in the stock as the company continues to develop Monte de Carmo. And with gold over $2,000, we feel that Cerrado Gold is well positioned to benefit from the positive outlook for the space. And now it's time to consider really taking a position in the company. With us today to discuss Cerrado Gold's operations and growth strategy going forward is the company's VP of Business Development, David Ball. David, it's great to have you on, even though I didn't see you for a few minutes. My apologies. But I'm really excited to have you bring our viewers up to date on Cerrado Gold and everything you have going on, especially with the property in Brazil. But before I turn it over to David, I just want to mention, if anyone has any questions during the presentation, simply type them into the Q&A or chat box, and we'll make sure they get answered. If you can't do that, then raise your hand, click the raise your hand icon, and I'll unmute your microphone so you can ask directly. So with that said, I'm going to turn it over to David Ball. David, the floor is yours.
Thank you very much, Anthony. And let me echo your sentiment and thank everybody for joining and giving us your valuable time. So the first thing I'd like to describe about the Cerrado Gold story is that it is a relatively new story. The company was private for a long time and really only came to the public markets just over 2 years ago. The company was founded on the back of our Monte de Carmo asset, and that is still our flagship asset. But we acquired a producing asset in the Santa Cruz province of Argentina just before we went public. And again, these two assets really share a common characteristic for both of us, but for us as a company in the sense that while they are quite advanced, they are very early stage assets in terms of exploration potential and what these assets can be when they grow up. Now, the reason that they've been developed the way they have is that we're a company that really believes in cash flow. So Monte de Carmo, we'll have a feasibility study out in May, and Minera Don Nicolas is already producing, as I suggested, and we're aggressively expanding that production. But both these assets are in a very attractive area and jurisdiction. They both have a large and prospective exploration or tenement package where they're located. And that's what really attracts us to these assets is the quality of the assets in terms of development potential, as well as that exploration upside. So let me tell you a little bit about Monte de Carmo and how that came to be, as well as the management team itself. So our CEO, Mark Brennan, along with Kurt Mencken, Casper, all of the gentlemen that make the management team have been working together for a very long time, with a particular focus in Brazil. That started with the Desert Sun company, which was sold to Yamana for, call it 700 million Canadian. They then went on to found Largo Resources and the Maracás project. So a long history in Brazil, and as part of that history, they were introduced to two geologists that found Belo Sun's asset. The same two geologists discovered that asset, and they watched that very closely as it grew from basically zero to a multi-million ounce asset and the largest undeveloped asset in Brazil right now. Those two same geologists then came to us and brought us the Monte de Carmo asset. They had a very similar story, suggesting that they could see 5 to 10 million ounces on this property. We then acquired it, did some drilling around 40,000 meters, and delineated a 1.3 million ounce deposit there down in Brazil. On the back of that deposit, on the back of the Serra Alta deposit, it's now called, we put a preliminary economic assessment out, and developed what I would say are probably some of the best economics I've seen on a gold project. And I'll show you just how good those are in the following slides. But on the back of that, we've rapidly moved it towards feasibility. And as I mentioned, we'll have that out in 2025. So that's been the work of the company for the last 2 years: infill drilling, focusing on the feasibility study, focusing on permitting, and focusing on getting that project into production as soon as possible. Now that we will have the feasibility study out, there's been a push back towards exploration to go out and delineate the 3, 5, 10 million ounce potential that the guys on the ground think exists. And a similar story with Minera Don Nicolas. So Minera Don Nicolas is our Argentinian asset. We bought this asset just before we went public. And we made that acquisition on the basis that we saw what was a producing operation with a lot of potential to improve. So it was being run by some local entrepreneurs. They had invested, call it $100 million US, into a beautiful plant, but they weren't really filling it up, and they couldn't manage the head grade, and they just weren't getting the results that they'd expected. They were doing around 20,000 ounces or 22,000 ounces of production when we acquired the asset, at all-in sustaining costs well above the actual at the gold price at the time. So they're losing a little bit of money. Our guys came in, saw some opportunity there to increase the throughput, to reduce dilution, thereby increasing the grade to the plant, and really turn around that asset in a short period of time. Now, after we acquired the asset, COVID struck, and Argentina was one of the countries quite hard hit by COVID. So the turnaround took a long time. It took longer than expected. But we're through that now, and you'll see that demonstrated by our strong operating results last year, where we did 50,000 ounces of production. The focus now for Minera Don Nicolas is growing that 50 to 90,000 ounces of production over the next 2 years, and we'll do that with successive heap leach projects. So this is basically processing the lower grade ore that is either has been stockpiled or is surrounding the higher grade ore in situ in the deposits, to add another 25,000 or 20,000 ounces of production this year, and possibly 20 to 25,000 ounces of production next year through a second heap leach project. Again, Minera Don Nicolas is an asset that we see a lot of potential in. The focus has been in the past, firstly fixing the operation and turning it around. Secondly, looking at how we can grow that production from 50 to 90,000 ounces. But now, again, the focus is to step back and take a look at the large exploration package we have down there in the Desierto Massif, and focus on exploration and growth through the drill bit this year in Argentina. So just some highlights of these two assets. Monte de Carmo is located in Tocantins in Brazil. The first thing you need to know about that is that it's not within the Amazon rainforest. It's in a very heavily industrialized, agriculturally industrialized state in Brazil, very wealthy state. As such, lots of great infrastructure around that we can take advantage of. The project itself is quite interesting in the fact that it is a relatively high-grade open pit deposit for South America, running at 1.85 grams per ton in the resource. And you can see that come up in the economics. So NPV 5 after tax at $1,600 gold of 620 million US, and an IRR after tax of 95%. That's really an exceptional number in terms of its ability to generate cash flow quickly and return that investment. You'll see in later slides that compares very favorably with pretty much any other gold development project on the planet. Now, that is a PEA and things move around, but the feasibility study looks like it'll come in, close to that, and will always be, I think, wherever it comes out, a very, very, very strong return on capital. So all-in sustaining costs of $600 an ounce means it's going to be very, very low cost. CapEx of 130 million, also very, very low cost in terms of initial capital. And I'll delve into why that's the case and what's so unique about this project later. But again, the feasibility study that is scheduled to come out at the end of May this year, we're predicting to generally be in line with those numbers. And I'll give you some further guidance as we delve into that asset a little bit further. Minera Don Nicolas, for those of you who don't know, it's Argentina. It's located in Santa Cruz, which is possibly the most productive and most easy place to do for mining in Argentina. It's located on a geological feature called the Desierto Massif. You want to think about Nevada in terms of Colorado. It's a very high-grade, low sulfidation epithermal deposit. It's relatively new. The first deposit of scale that was discovered there was really in the 70s, and that was Anglo Gold with Cerro Vanguardia. So it's got a 100th, I don't even know the number of the exploration but spending that Nevada's seen over the years. So a district with a lot of potential. What we have down there is a very, very large land package. It's 330,000 hectares, which is roughly the size of Rhode Island. I think it's the largest package down there of anybody. We're surrounded by very large mines. I mentioned Cerro Vanguardia. Cerro Moro is to our east, which is Yamana, now Pan American Silver. There's also Cerro Negro, which is Goldcorp. Hochschild is there. So all the guys are down there. Barrick has just started entering the region as well with the joint venture. So a very, very interesting area in Argentina. Good production last year, better production will come through this year, and then we'll hit that 90,000 ounces in the following year. So if you put those two assets together, you get a very aggressive, I guess, cash flow and production schedule. You'll see our production growth really over the short term is driven by our Argentinian asset. Again, that's those two successive heap leach projects coming online this year and then in 2024. But the real step change occurs when Monte de Carmo comes online in 2025. And you'll see us push above those 225,000 ounce numbers as that gets into full production. Just some history on the management team here. I touched on that in the intro, so I'll just move forward on that one. So let's dive a little deeper into Monte de Carmo and what I think makes it quite special. First of all, you couldn't really ask for a better place to build a mine. We have a 99 kV power line running through our project. We're 2 kilometers from a paved road. We are 40 minutes drive from the state capital of Palmas, which has a population of some 300,000 people. The grid is predominantly hydropower. And then most importantly, one of the great things about operating in Tocantins is that Tocantins has jurisdictional control over both federal and provincial permitting. So they have their own environmental agency called Naturans, and that's the only people we need to deal with. So there's one level of bureaucracy that we need to deal with to get our permitting. So that makes things a lot easier and simpler and quicker, which is why we think we can have our construction permit, call it early Q3 this year. The permitting process in Brazil is a 3-step process. So you get your initial permit or your preliminary license, which we expect in the coming weeks. And then within 90 days, we will have our construction permit, which allows us to build. And then once you've finished building, you get your final production permit, which basically just ticks the box to make sure you've built what you said you would build, and then you can start production. We have, as I said, 85,000 or 82,000 hectares roughly on site. Our existing deposit, Cerro Alta, which is that 1.3 million ounces that we've delineated, runs about a kilometer in strike from Gogo-Oncle to the north to our south zone. And you'll see here in these white markers here on the right, these are the historic Conquistador and Garimpero workings that you see really all over the property. If just in terms of scale, if you take this 1 kilometer strike and look here on the left, you'll see Cerro Alta really is a very small fraction of what is a large area, an attractive area for exploration. We've mapped this mineralization on surface for 30 kilometers or more, and you'll see this sort of circular shape here is basically the intersection of this granite intrusion with the felsic volcanics. And all over this area, you'll see gold, some of which we've drilled, such as Baru, Capital, but nothing has really seen the quantum of drilling that Serra Alta has seen. So what we're really trying to do this year is to create another Serra Alta, to discover another Serra Alta. And as you can imagine, given the economics at Serra Alta, that could be quite transformative for the company. Serra Alta alone, that 1.3 million ounces, 1 kilometer of strike, has the potential to generate very, very significant cash flow. We're talking $112 million per annum, and that's not that far away, right? 2025. Very, very low cost of production, very, very low capex, and that's really driven by luck more than anything else. We got quite lucky with this deposit. A lot of the gold is free gold. You crush it, grind it, run it through a gravity circuit, and you get some 80% recovery. We then concentrate it, run it through a normal CIL process, which most people in the gold industry would be more familiar with. But only 15% of the ore sort of has to go through that process. And that means that, to get to a 97% recovery rate and those production numbers, we have a very, very small footprint in terms of the plant and a very low operating costs, very low cyanidation numbers, all those sorts of things, very low footprint in terms of waste, etc. So really, really nice metallurgy, and we got really lucky with that. And if we can replicate that over a couple of the deposits, you can see how an NPV of 620 can grow substantially from there.
So, David, so in terms of, is it too early to talk about, where you think you can expand that mine life to from 8 years? What percentage of the property have you actually drilled?
Yeah, so let me just flip forward then. There's a good slide on this. So if you look here in the bottom of slide 14, you'll see that we needed roughly about 40,000 meters to sort of really to get Serra Alta to the 1.3 million ounce scale. Some of this is obviously condemnation drilling and infill drilling, and there's nothing really else on the property that has seen much more than 6,000 meters drilling. So there's a lot of work for us to do this year, and we've got about a $10 million budget to go and drill these projects out. I think there's a rig now turning on this divisa to the north, but we've been doing some work to the north of Serra Alta. We think that trend continues. So this year is going to be really the year that we can discover that. So it's too early to say how big or where it's going to be, or what the numbers are, whether it's a satellite deposit, whether it's additive to Serra Alta. It's a little early for discussions but I think this is the next 12 months we'll be able to understand what the scale is of some of these things.
Thank you.
Not a problem. And so I bang on a little bit about how lucky we got with this project in terms of returns, but if you stack it up in terms of NPV to initial capex against some of the kind of market darling development projects out there in the gold space, you can see that Monte de Carmo really stacks up, is basically the best return on investment you can get. So if you want to invest $1 in building a gold project, you're not going to get a better return than Cerrado and Monte de Carmo. Now, I will caveat that this is all a PEA based, and we still to yet finish the feasibility study. But the way the feasibility study is panning out, even if we have an IRR of 70%, 80%, it's still head and shoulders above of most of the projects out there. And whatever happens at any stretch of the imagination, this thing is going to be in the top 3 best projects, I think, globally that you'll see. And it'll only get better with scale. So here's the rough timeline. As I mentioned, the preliminary license is looking very imminent. Construction license will be followed 90 days following that, which will then put us in a position to build. To build, we need to raise, call it $160 million worth of capital. I think a project of this nature, with these returns, with these operating margins, should be able to attract a decent amount of project financing, call it $100 million. I don't think that would be a very difficult stretch. We're obviously having those discussions already as a management team, and the reception has been pretty good. Additionally, we have a stream on the asset with Sprott streaming. They have indicated a desire to add to that stream to help finance the construction. Depending on how much we add, depending on how much project financing we get, it's quite possible we wouldn't have to raise any additional equity to build the project, which is quite a nice position to be in, given the state of our valuation. Now, it's probably not the best structure or capital structure to build a mine. So, we'd obviously like to have some equity, but I think it just gives us a lot of, I guess, sort of leeway or ability to kind of manage the market a little bit and reduce our equity should things should be worried about dilution and share prices not performing the way that we want it to. Again, this is, Cerro Alto being what it is. There are several different potentials, I guess, for another Cerro Alto on this property. And as I said, I think 2023 is going to be the year that we really get a sense of that. We have several sort of near-term targets that are being drilled, whether that's to the north of Gogo de Onca, whether it's the north of Cerro Alto, whether it's Bit 3, Baru, Ferradura, Fatura. You'll see there's multiple targets. Rio Tinto held this property at one point, and Mark just got back from being on site, and they have this sort of list of targets that Rio Tinto had, and there was some 40 targets on this property alone. And that's really just to the land in the south. So it's very, very prospective area, and we're really just scratching the surface of what we think this could be. I'll just touch on the fact that doing all the work on Cerro Alto and the infill program and doing all the geological work and understanding to get this thing to a feasibility level has taught us a lot about where the gold is situated, and we're now applying that knowledge to this drill campaign. And so what we've really learned is that the gold essentially is sitting at the intersection of this large granitic intrusion you can see in pink here, and the felsic volcanics, and that's where you get the quartz veining. You also see a much more concentrated gold when it's adjacent to these northeast shear zones, which help the fluids flow. And the other thing we've learned is that we need to drill. So that's what we're doing this year, right? We need to put a bunch of drill holes into some of these targets to figure out, what their scale and size. But applying all of that, we've come up with a whole bunch of targets, which I won't go into in detail, but you'll see some of these have been drilled already, and we've already found gold, whether it's at Baru or Gogo, whether it's at Bit 3. Some of these are undrilled, like Devisa, which I think we're starting drilling either today or yesterday. And then there's other things that we've drilled where now we can apply the geological model at Cerro Alto and realize that maybe we've missed the kind of meat of the deposit, and we need to kind of come back and take another look. So plenty of work to do and plenty of upside. I think I'll just pause there on Brazil before I go into Argentina, and just allow any time for questions.
Yeah, in terms, you said some of the numbers might shift around between the PEA and the PFS.
Yeah.
Obviously, I'm certain that costs have gone up since since you did the PEA. Do you feel like CapEx is going to be impacted in a major way?
Yeah, so it will be impacted for sure. I mean, I think the whole mining industry is seeing the effects of inflation. There's some things that have changed in the model that will counteract that per se, but I think 130 is where we were. I think 150 is probably where we'll end up. Again, this is all stuff that needs to be finalized, but we're certainly seeing CapEx pressure. But not to the extent that I think most people are predicting. I think it'll probably, as I said, be in that sort of 150, 160 range. Some other things that I think are changing is you will see that in the PEA we had quite a high strip ratio. And if you look here at the deposit on the left, on this image to the top left, you'll see why. As you move east, you get under the sedimentary cover and the strip goes up. What I think you'll see in the feasibility study is that in the later years, we'll switch to underground mining. and we'll mine 2 or 3 years underground, which will really drop that strip and will drop that operating cost in the later years. The other change, I guess, is that in the first couple of years, we had some really, really, really good economics in the terms of grade. I think that's come down now. Though, this high grade zone that we were modeling when we infilled was disallocated by a fault. And so I think the first few years, it's going to be less first few years weighted, but more, I guess, more consistent over the life of mine. So I think, there's some things that'll move up, there's some things that'll move down, but I think we're still targeting, kind of high 500 million NPV and IRRs in that kind of 80 to 90 range. So
yeah,
in any case, very, very, very good economics.
absolutely.
Very short payback. Life of mine costs of all-in sustaining costs still around that 600 level.
Yeah, that's incredible when you consider too the capex at 150 is reasonable. So you said for capex to find the mine to finance the mine, you're basically would shy away from equity, obviously, at these levels. That makes sense. So would it be some sort of agreement with Sprott, and then can you go over that one more time? Would it be to just maybe take on debt for the remainder of it?
Yeah, I think the first thing is debt. Like the more we can maximize debt in this project, the better.
Mm-hmm.
The margins will support it. The payback period supports it, and certainly, us as management owning a significant portion of this company would support it in terms of minimizing our total dilution.
Yeah.
Which I think is important for everybody. So debt is the first port of call. Then there's the stream. And so Sprott have already indicated, you'll see it in the announcement when we announced the initial stream, that they've requested the right to add additional stream. That's at our discretion, obviously. Now, the terms of that are to be negotiated, but they'll be normal sort of arm's length market terms, but that, as I said, will be the kind of it'll be that between that and equity, I think, which we'll play with, depending on where we are. Now, I think because the PEA showed such incredible economics, I think a lot of people are kind of wait and see. They kind of say, well, I want to see the feasibility study. That seems a little bit too aggressive, et cetera, unbelievable. And so, I'm hoping, and I think it's quite likely that once that feasibility study comes out and all the numbers are confirmed and the economics are as robust as we suggested, there'll be a re-rate. But you never know, right? The market is the market. And so it's good to have that flexibility with the Sprott piece to sort of limit equity if we need to.
Yeah, which is a good way to segue into this question that came in. I guess you are pulling your hair out with the frustration and hoping you are not acquired before you can re-rate. There's so much long-term, obviously, potential with what you have, especially if you can get into production with that low capex. It has to be frustrating for you with this with this big disconnect between the true value of the company, even based on the Brazilian asset alone versus what the market cap is.
Yeah, it is very frustrating, I won't lie. But we're in good company. I think unless you're major and of significant scale, we're talking a couple of billion market cap, I don't think this market is generally interested. And I think that'll change. You'll see a lot of M&A is starting to pick up. Gold price is starting to pick up. And so the generalist funds will start moving into the space again, and that will really change things. And when they do change, they change really quickly, right? But I don't think anyone here or around the investment banking industry here in Toronto can remember a time when there was such a disallocation between commodity prices and valuations. $2,000 gold copper up near $4. Zinc is doing well. All these commodities are doing well. People are making good money. The valuations start there. And I think that to me just shows that we're on the cusp of things coming back.
Yeah, and we've been involved in the resource sector for a long time, and we know that the exploration companies are really the last ones to kind of make that leg up, and when they do, it's really swift. And it's a great opportunity down at these levels. One more question before we move on to Minera Don Nicholas. In terms of the Brazilian government, obviously, what's going on in Mexico, where they proposed dropping, concessions from, 50 years down to 15 and things like that. Are you seeing any kind of indication from the Brazilian government that would make you nervous, like what we're seeing in Mexico?
No, is the simple answer. We haven't seen much. I mean, there's always discussions ongoing about provincial royalty rates and tax rates and all that sort of thing, and you see that everywhere. But we haven't seen any real pressure on the mining industry or real discussion of bringing in punitive tax rates or royalty changes, etc.
Okay,
the mining industry is such a large part of Brazil and Brazilian economy. It would be counterproductive for them to do anything that would damage that.
Yeah, I'm certain that you're probably making a big impact, positive impact in the communities where the mine is located. Does the government ask you to, make investments in those communities, outside of employing people?
We always do. We always do what we can. I think it's just good business practice. Just to give you some sort of anecdotal evidence, right? When Kurt Mencken and Mark built the Maracás project with Largo Resources, the local football stadium there is named the Mencken Stadium, right? So when we do these things, we do it with a view of bringing the community alongside and making sure that they're active participants and part of the family. That doesn't just mean jobs. It means lots of other softer issues. And I think in the region that we're at, where we are, they're looking for sources of income outside of agriculture. And there's only 2 operating mines in the state right now, so I think they're looking to diversify their revenue streams as well. So they're very supportive.
Great, thank you.
So Argentina. So let me move on to Argentina here. So Minera Don Nicholas, as I said, we acquired as a producing mine just before we went public. And it's a bit like Brazil in the sense that it's an asset that's very young, despite being in production. There's a huge land package that we have here, right in the heart of a very, very prospective district. Lots of work for us to do on the exploration side, lots of work to do on the exploration side in the district total, right? I mean, if you just compare the Deseado Massif to Nevada, it's a couple of 100 years behind in terms of exploration. And we've got a very large package right in the middle of that. And why do we think that we can grow this asset and that we really need to kind of do the work here to figure out what this asset's going to be when it grows up? Well, we're really just following the same path that these other large mines have followed in their history, in the sense that they start mining these, as you do, these high-grade open pit veins, but then they sort of add a heap leach project to add the lower grade material, and you'll see that most of the actual development in terms of both production growth and resource expansion really doesn't happen until they go underground. So that's kind of the next leg of growth for us. We've got a couple of open pit operations. We're starting a heap leach this year and then a subsequent one next year. And we're just starting to sort of look underground. And that's where these assets have really taken off. Now, I'm not trying to suggest that Minera Don Nicholas is going to be the next Cerro Negro, but what I am saying is that we just haven't sort of done the work to figure out whether it is or not, right? to test that potential. And that's what this year is going to be about. And we're doing all of that on the back of what I think is a pretty impressive turnaround story here. As I mentioned, within 2 years of operating this thing, we've gone from 22,000 ounces of production to 54,000 ounces last year, and then growing very, very, very rapidly from there on. And the easiest way to do that, again, is to follow the same trend that everybody else is to look at things like Las Calandrias project, develop that as a heap leach project. You'll see, all this sort of lower grade material. And when I say lower grade, it's still, gram a ton stuff. Now becomes economic, and this higher grade material would then go to the plant, right? This sort of plus 5 gram per ton material is what our plant is being fed at. That would go to the plant, and the heap leach material sort of gets leached in situ or on site. Same with Martinetis. All the material that comes to the plant that isn't sort of 5 grams and up gets discarded or stockpiled, and so there's a large inventory of material that we can turn into a secondary heap leach project next year. On the underground potential, this is our main pit called Paloma in the northwest, and we've sort of done some, I guess, preliminary drilling here to see what lies underneath. We're going to do a lot more of that drilling this year, and the idea is to sort of develop this into our first underground operation, and really see what we can do to grow this deposit, similar to other deposits on the belt. Again, there's just pointing to the prospectivity of this asset. There's a heap of work that we need to do. All these little red lines that you'll see on these maps are liniments, potentially veins with gold. And so there's a big campaign this year, again, another sort of $8 to $10 million worth of budget to go out and drill this project. Just before I move on from Argentina, a lot of the question will be about, that always comes up about Argentina is, well, that's all well and good. You're generating decent cash flow there, but how do you get it out of country with the currency controls in place? Now, it is a difficult situation and a difficult place to work in, to operate in. But right now, we don't have that problem, in the sense that we have a use for all of the cash that we're generating in Argentina. That is building this heap leach project this year, Las Calandrias, building the heap leach project for next year, Martinetis, as well as all this exploration work. So we've got plenty of use for the pesos that we generate for the short term. In the longer term, I think one of a couple of things will happen. One is, currency controls, I think will be removed eventually. There's an election at the end of the year. The right people get in government. It's going to be quick for them. It's going to be a very quick turnaround for them to reduce these currency controls or remove them completely. And if that does, I think there'll be a massive re-rate potential of all of these assets in Argentina will be massively re-rated. I mean, at current gold prices, we're spitting out our market cap and more every year in free cash flow. So I think if that happens, there's a very large re-rate potential. If it doesn't happen in the near term, what you'll see is that, we're starting to see, I guess, glimmers of this, is you'll see an M&A wave take place in country. And the reason that is that a lot of these large producers that have been producing for a while have large amounts of cash flow. They're starting to generate stockpiles of pesos that they can't put in the bank because of the inflation rates. They can't bring home because of the punitive exchange rates, and so they'll start looking for projects to buy. And so I think you'll see an M&A wave come through there. And so what we tell investors is, look, give us a year to do all this drilling, to do all this work in Argentina to figure out what this asset is going to be when it grows up. Argentina is not drawing any funds from Toronto or out of Brazil. It's self-sustaining. We just need a year to figure out what this asset's going to be when it grows up, and then we can make some strategic decisions about what to do with it. Or, when currency controls release and it's a massive cash cow, or they're not. Maybe we sell it. Maybe we have lots of optionality at that point.
Okay, thanks.
So this is how the company sits. I actually think our share price is up closer to 90 something now these days with gold running. But we've managed to keep dilution to a minimum. Only 80 million shares outstanding. And and a very, very large insider group here. 40% is owned by management and insiders and directors. That's what gives us a little bit of comfort, I guess, going back to an earlier question about being taken out at these levels, right? At a PNAV of 0.16, I think even 100% premium would be a steal right now. So we luckily we can control the register pretty well, and put ourselves in a good position to create that value and daylight that value before those sort of discussions ever occur. This one just really shows just how cheap we really are. I mean, if you look at just the Brazilian asset here, consensus analyst NAV, so fully financed NAV of $4 a share. Let's throw a really harsh multiple of 0.4 on that, and you've got a $1.60 share price where we should be trading right now, as we are on Brazil alone, with nothing for Argentina, if we were to trade in line with the junior developer average. So yeah, I think it's a pretty obvious disconnect here.
Yeah, big time.
Well, that's it for me. That's the spiel.
Okay. Yeah.
Some questions.
Yeah, we got some questions. We got one in queue already. Obviously, if we're gonna open it up for Q&A, we have about 15 minutes. If someone wants to, if you have a question, just type it into the Q&A chat box, and we'll make sure that it gets answered. Obviously, you know, at Torrey Hills, we feel that Cerrado Gold is way undervalued. When you look at the, you know, just, you know, forget Argentina, just look at this project that they have in Brazil and look at the economics on it and look at how close they are to getting it in production. We feel that based on that alone, that the stock is way undervalued. So question came in about average cost of insider shares, and can you speak to institutions as well? Like, what's the cost basis for a lot of the insiders and institutions who are involved?
Yeah, the big raise private was at 20 cents. So there was like no free shares, is I guess the other thing, right?
Mm-hmm.
No one got like a bunch of cent stock or penny stock. The big raise was done at 20 while it was public, and then when we went, so while it was private rather, and then we raised 15 million via the public offering, and that was done at $1.35. That's where all the instos came in.
Okay, great. And then you talked about it.
All these numbers are Canadian, by the way, I should say.
Right. Okay. And warrants. Can you discuss how many warrants are outstanding or options, and if they are in the money, out of the money?
Yeah, I think there's about just under 20, like 18, I think, and they're all out of the money.
They're all out of the money. Okay. So you talked about, obviously, your Argentina asset's going to pretty much finance itself, but you also are going to.
Well, ironically, like you'll see that we just announced a deal where we added another $10 million to the stream.
Yes.
That's basically bringing that heap leach project in under the existing stream with Sprott. And so that money will come to Toronto first, right? So it's ironically, Argentina's financing everything else.
Yeah, which is fantastic. But you also talked earlier about you know, a somewhat aggressive drill program in Brazil. When you consider you know, your cash position now, how much do you think you'll have to do a raise in order to, you know, finance your drill program? You know, what's your cash runway right now outside of the CapEx for the new mine?
No, we're more than covered before we finish the feasibility and need to start thinking about construction financing. That's when we'll need to raise money. So when we go to build. Okay.
And ownership structure of the properties, do you pay royalties on them? How does that work?
Yeah, so there's government royalties. There's also royalties and streaming arrangements on both assets. If you look on I mean, it's all in the appendix here. I think is the third party stuff, which I can go through in detail. But each of them has a different structure. I'll never find it now, but if you
That's
go to
okay.
the website, you'll find it quite easily. And then obviously corporate taxes and things like that, but nothing outside of those.
And are you looking to add any new properties, or is the focus on the project in Brazil?
Look, I mean, we're always looking. We're always looking for assets that have good returns, that are in good jurisdictions, that make a lot of sense. But right now it's hard for us to justify issuing Cerrado stock at these levels for assets that are trading better than we are.
Yeah, for sure. And obviously, you have enough on your plate right now. But if you see something that you like, obviously, issuing a lot of shares. We really like the way that management doesn't want to dilute shareholders, and I think that's really important because there are a lot of companies out there who don't take that kind of approach. So it's refreshing to see that. I don't really see any more questions in the queue, David. So I think we're going to leave it there for today. I want to thank you for coming on and getting our group up to speed on Cerrado Gold. I'm going to attach the deck to the feedback link when I send it out. I have to say that when you look at the economics of this project that's going to come online in early 2025, first of all, it's basically a year and a half away. And so in mining terms, it's right around the corner if on the calendar. So keep that in mind. Low capex, high return, really checks all the boxes for us. And so we really feel that it's worth taking a look. And we think that gold will continue to stay above $2,000 an ounce for the foreseeable future. So it's definitely the right time to be looking at the company. Even if you give Argentina no value, this for sure, the Brazilian asset will definitely be a feather in their cap going forward. And then as David mentioned earlier, we could see political developments in the future change how business is done in Argentina, make it much more friendly, for the mining industry. So, keep an eye out for that. A lot of opportunities for re-ratings in the stock, especially with the PFS slated for next month. So, in the meantime, if you want additional information on Cerrado Gold, you can visit the company's comprehensive website, cerradogold.com, including details on the company's current projects, as well as latest press releases. David, as usual, before I wrap it up, I'd like to give you an opportunity for some parting words for our viewers today.
Sure. Look, the one thing I probably failed to mention is that we talk about the valuation and the potential for a re-rate here. But it's important to note, as you mentioned, that there are real concrete catalysts that are coming in the next kind of 6 months to actually push that along. So we'll have our fourth quarter annual results come out very shortly, which will demonstrate, again, how we've improved the Argentinian operations. We'll have our preliminary license announced within the next couple of weeks on Brazil, which will show that we can get this project permitted and it's moving forward to production. And then, of course, the feasibility study out on Brazil at the end of May, I think, will be a real catalyst for the stock. So I think in the short term, there's real concrete catalysts and real concrete things that will come out that'll demonstrate the value of this company. And all of that is aside to the fact that we have the drills turning, right, in both Argentina and Brazil. So I think this year is going to be the year that we really turn this story into something that the marketplace is going to have to pay attention to.